Okay, so let's make an update on the situation that we currently have on GBP USD. Now, if we remember from our previous analysis, what did we say on this pair? So starting from the weekly, after the market had created this W formation exactly from here because it was the previous support here, now turned resistance. We wanted to see the market give us a nice move to the downside. And in fact, that is exactly what the market did. Then what did we say? We said after the market on the daily time frame had created this M formation, retesting previous structures or previous daily resistance, now turn support, a very strong demand area. We wanted to see the market make this move to the upside to complete the formation at the neckline, aka the previous support, not on resistance. And again, that is what the market did. From here, again, we wanted to see the market make the continuation to the downside for the creation of a lower low. And again, that is exactly what the market did. And obviously, we capitalized on the move to the downside with students. Then what did we say again? We said after the market created five waves to the downside. So 1, 2, 3, 4, 5. We want to see an inversion of the trend and a continuation to the upside. And that is exactly what the market did. Now, it would have been better from here to see a retracement because at that point we could capitalize on the continuation to the upside and creation of this inverted head and shoulders. However, the market did not give us the retracement. And I will link all this previous analysis in the description so you can go and check them out for more free education. But now, what is the situation on GBP USD and how we can be looking to capitalize on the pair? Let's start from the monthly time frame. Now, on the monthly, what we can clearly see is that the market has a very strong demand area, support area from the monthly perspective. We can see that from here, the market started all this move to the upside, rejecting this low. Again, the market rejected this zone as a very strong support. Again, rejected the area here, creating this extremely strong layer of support. So on the monthly, we are rejecting support. Perfect. Let's go down on the weekly and see what we have on the weekly time frame. Now, from the weekly, we can see that currently the market is approaching and has already approached and started to reject a very strong structure area, which was structure support here, again structure support here, structure resistance here, again resistance here, and again resistance here, and we can expect a reaction to the zone. We go down on the daily time frame and what kind of situation we have on the daily. Now on the daily, we have a very clear pattern. The market from here went down, up, lower low, higher high. So if a market creates a low, a retracement, a lower low, and a higher high, it creates a W formation. And when is this formation completed? When the market makes a move to the downside to complete the formation at the neckline, aka the previous resistance, which is now turned support. So where is the completion zone of this formation? Is exactly here. So at this level, that was the previous support, now turned resistance, turned again resistance, and now turned support here. Now, the problem is that from a 4-hour perspective, at the moment, the market is still looking quite bullish. If we look at the overall structure that the market still has at the moment, but it seems like it's starting to break to the downside and started a nice rejection. Now, before I show you how we will be approaching this pair with students, let's go and give a quick check at what we have from a COT perspective. So commitment of traders, what the biggest banks and institutions are currently doing on this pair, specifically GBP USD, because always remember that all currencies on the spot are traded against the USD. So if you check the data for the GBP, what you are actually checking is GBP USD. And what we can see, we can see that we went from plus 35K net positions all the way down to minus 36K net positions. So from having way more longs than shorts with 76K longs and 40K shorts, all the way down to having way more shorts than longs with 63K shorts and 26K longs. And then in the short term, we have seen an increase in the strength with more longs getting added. However, overall, we still had a clear shift to the downside, so we can definitely expect some weakness and the pattern to complete. So how we will be approaching this kind of situation with students? We will be monitoring price action on the 4-hour time frame instead of this area because, as you know, monthly, weekly, and daily are for direction. The 4-hour is the best time frame for entry. But first, we have to wait on the 4 hours for the market to shift from a bullish market to a bearish market. And as soon as the market will provide to us 1 hour valid entries, we will be taking a nice short with a very good risk to reward and good probabilities for the move to the downside and completion of the formation at the neckline. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.